quick check. Can everybody hear me? All right, good. Thumbs up, so.
Okay, great. Hello, I'm Bob Grossman. I chair the Israel practice for Greenberg, Traurig, which I co-founded 20 years ago. We have an office here with 16 attorneys. We are a firm of 45 offices with about 2,600 lawyers with a big AgTech group. And I'm a regular visitor to Israel, and I love being here. In the audience, we have one of my partners, Adam Snukel. I don't know if anyone else is here. Anyway, we're here with Ryan Teksten, who is the Senior Director of Venture Investments for Leaps by Bayer. Ryan is a board member in many ag tech companies, and he's a graduate of West Point, Tufts, and MIT. But Ryan's very good at telling his own story. So why don't you tell us how you got into doing what you're doing today?
Great, thanks for the introduction. Really a true pleasure to be here with so many of great investors, entrepreneurs, and the ecosystem here in Israel. It's been 30 years since I've been here the last time, and I can tell you that Tel Aviv has truly changed and transformed as a location and a destination, and truly a hub for innovation. Just a little bit about Leaps. The Leaps by Bayer, we are the corporate venture group for Bayer. We're separate divisions, so we actually don't reside in either pharma, healthcare, or the Bayer Crop Science, but there are 4 of us that are dedicated to the food and ag system investing. So we are very dedicated to an impact investment thesis, of which there's 10 leaps, really focused on impact from the standpoint of early stage investing. And I came to that really through sort of my start as a farm kid. I grew up in southwest Minnesota in a corn, soy, and integrated cattle operation. Sort of quickly progressed as an economist and system engineer, as an Army officer, as a consultant, in a startup, and found myself angel investing in some early stage companies, and I found that the larger ESG and sustainability aspect of the thesis really caught my eye about 5 years ago. So we'll go deeper into that, obviously, and soil specifically. But I've been investing for over 5 years and 3 in the last with Leaps.
Thank you, Ryan. Your focus primarily is ag tech?
It is. I focus on ag tech. We think about it as food and ag, so the full system. As Adam Bergman actually laid out a great sort of farm to fork. We think about it. Bayer's obviously an inputs business. The farmers are end customer, and then obviously there's the supply chain and the post-harvest aspect of that value chain. We think about capturing value across all of that as an investor.
All right, so the title of our presentation is Buried Treasure, Unearthing the Currency of Ag Carbon. I have to look at it because it's so long. Soil health and sustainability.
Yeah.
What is, quick, easy question, I hope, not, what is the currency of ag?
Well, it's a great question. I think Adam laid it out. Interesting that food security is really the precipice of a lot of investment thesis and the focus today. The sustainability aspect of that ESG thesis has driven Wall Street to really focus on public companies, and what that trickles down to is investors are looking at private companies. So that treasure, I think, really is looking at the sustainability aspect. My personal thesis is that is a soils first approach, and within our team we've developed a pretty detailed thesis around what it takes to have a soils first approach, thinking about the chemical, the biologic, the physical traits, what that has as a influencing factor into sustainability, and then ultimately what that means for markets. So for us, soil health is really an umbrella. Soil health is the umbrella of which people focus on carbon largely because that's the most easily monetizable aspect today. But farmers think about NPK and their fertilizer regimen alongside traits and alongside all aspects of their soil. And just to be very clear, I think actually Leonardo da Vinci said it really well. We know more about the celestial bodies than we and the workings of the heavens than we do about the soil under our feet. So obviously that's a dated quote, but I think it's still accurate. And we're probably at a precipice where we will learn more about the soil in the next 10 years than we have over the the lifetime of humanity. So we're really at a turning point for where science, technology will disrupt and really create opportunity for how farmers and how humanity uses soil on a daily basis.
Is there a balance that the farmers have to deal with in terms of what benefits them in the long term and the short term?
Absolutely, and the farmers think about temporal arrangements, right? So very agroeconomically focused on making cash flow and profit on a yearly basis. So every growing cycle is important because essentially the bank and the credit lines are all supporting that season. But over time, soil doesn't think about seasons per se. It thinks about the lifetime of soil. So farmers now have the opportunity to create wealth through improving the quality of their soil over a lifetime. But pairing that sort of seasonal agroeconomic decision cycle and pairing that cycle up with, say, a decade of what it takes to create a carbon credit, those two things are not in conflict, but they do require a farmer to make decisions. And the unique part of this is not all farmers own their land, right? But all farmers farm the soil, and that soil benefits them from yield and sort of the decisions they make as an agroeconomic input versus output.
So what kind of methods or technology are you seeing that you consider to be useful, or maybe the wave of what's happening in the future for improving the soil?
So I think there's a whole host of new technologies that are coming out, very early stage in some cases, sort of in growth stage in others. I'd say I have a background in remote sensing. I ran product for a company called Digital Globe, which is now called Maxar. That commercial product, we were looking at essentially the full spectrum to understand the level of soil health. Now, granted, 10 years forward, there are sensors that look at the spectroscopic fingerprint of the soil as a digital probe. There are drone and UAS platforms that can collect very detailed MSI, HSI, and other sort of spectra that will inform and give us a better understanding of the soil. And then, of course, there's satellite-based. So I'm very remote sensing focused. I think the opportunity to gain trust with the farmer by essentially creating a digital twin at some point, but understanding what their decision points are in the interim. I think that's how we bridge that conversation. We need to meet farmers where they are on their decision cycles, but using sensors like ground penetrating radar or electromagnetic induction on top of remote sensing, like from a drone, really gives us the opportunity to create a sort of a full view of what soil looks like. And this is a complex conversation. Soil is a very dynamic system that includes moisture and the climate effects. But I think at some point we actually see soil transitioning to becoming a very manageable aspect of the inputs in the business, rather than just being subservient to the soil that a farmer has. So soil amendments are going to be largely an area of disruption, as well as understanding sort of mid-season alternatives to moisture management, as well as other soil remediation.
Okay. Are there any other like a cover crop or?
That's a great point. So cover crops, Regen Ag as a label has gotten obviously a lot of attention. The Regen perspective obviously has pillars that speak to creating additional soil health. Cover crops are one of them. So one of the Leaps companies, Covercress, recently had an exit. And Covercress is really interesting because it's taking what was historically viewed as a weed, modifying it, creating a cover crop, and that cover crop then ultimately becomes a low carbon intensity crop that has benefit not just for fiber but also for oil. And this is considered a third crop, where that cropping strategy does not add any extra ultimate cost to the land because it fits within a corn or soybean rotation, but yet has economic output for the farmer. And it's one of many cover crops. Look, to be clear, dairies all over the world already use ryegrass as a cover crop to manage erosion. And the veg production facilities do this as well for outdoor veg production. Using cover crops is not new, but I think the utilization of it to optimize soil health is where we'll see a really interesting advancement.
All right. Thank you. So far we've been talking about really the treasure based on the impact of the companies you look at. Obviously, I think you're an investor. You're looking for a return. What are your investment criteria when you're looking at a company?
Yeah, that's a great question. So, as a precept, Leaps is set up as an impact investment opportunity, right? So, as a balance sheet investor, we of course look for returns financially, but the primary driver for our investment thesis is impact, and that impact can be defined in any number of ways. It could be correlation with a business, furthering opportunities within the business lines, growing a market. One way to think about it is we often ask the question: could we envision this company that we invest in either being bought into or create a whole new business unit within Bayer? It's a very general question, but it actually begets a lot of additional sort of what-ifs scenarios. So we think about technology and the opportunity to create value for the farmer, and using that technology is an enabler for additional financial models. I think is very viable. I see a scenario where the easiest way to reduce food security in Africa is just to apply nitrogen. Of course, that has horrendous economic and frankly, horrible environmental effects. So it's going to become incumbent upon global participants to get close to the soil and help farmers in Africa understand their soil stratification and what traits, chemicals, and other soil amendments will ultimately produce the best nutritious crops. And I think that's really the primary aim, is that, of course, as an investor, we're looking for a return. We watch that closely, and we caretake those companies for financial return, but it's about impact, not just for Bayer, but for humanity.
Do you care if it's early stage, late stage? Does that make a difference to you?
So that's a great question. I personally love the seed stage and Series A companies. I really prefer to lead, and this is a Leaps perspective, we prefer to be active investors, lead Series A, Series B rounds. We take the long game view on this, is that we're patient capital. We have earmarks for follow-on rounds for all investments. So we're there for the long term. And we think about this, leap for humanity. It's really through scientific disruption. And that scientific and technical disruption sometimes takes time. And so early stage companies I find personally valuable because that's where the creativity as well as the drive of entrepreneurs are met alongside other investors that are part of that syndicate of investors. And we essentially, and my personal approach is a servant leader approach. We are there to help make their dreams come true and to put fuel in the fire to accelerate the innovation and make it possible.
Do you have a difference between, do you have a long-term outlook, or a long time horizon for a company that you invest in, or you look for something quicker?
Sure. I would say that compared to financial investors, we are not bound by sort of the general expectation of invest in year one, exit by year five. I've certainly invested as an angel investor, hoping that my return would happen in the 3, 4, 5 year range. From an investor from the corporate side, we do have the benefit of taking the long view. And I think that's to the benefit of the entrepreneurs, the business, the culture of that business. It can really thrive if they know that they have strong investors behind them that have a long view on it. Clearly the growth stage is full of uncertainty. We accept that uncertainty and we operate within it. So it's really about understanding risk, just like any other business.
Do you have a dollar range that you would invest in a?
Yep. So within Leaps, we have invested as little as $500K in a business that does have revenue today, in a debt note, in an unpriced seed round, all the way through to $20 million on a late Series C, just before crossover. So we typically don't do that growth equity on the Series C, D, and in that crossover round is probably beyond our scope in traditional format. But we feel very comfortable in that A, B, C range. So
sounds like your focus is primarily soil health. What's interesting to me, in Israel, for example, there are several companies that deals with trees, one that deals with water. They've been using land, sea, subsurface and ground to measure their products, and they've now decided to go from just telling a farmer or telling an owner of trees how to grow the trees, or getting rid of a toxic algae bloom, to focusing on the carbon reduction. Is that something you're seeing happening in all over, or is this just Israelis are smarter than everybody else?
Well, I would just say that they're very smart and very keen to adopt market trends, oftentimes more quickly and innovate on that than the rest of the larger ecosystem. For LEAPs, we have 4 LEAPs that are looking largely at the food and ag system. So we have a recent investment in Newsizer looking at essentially chickpea. So think about chickpea as an opportune market for protein production. So as Adam spoke earlier, when it comes to environmental impact, we all know that protein is oftentimes the long pole of the tent. So looking at new crops that are widely available, and also the widely desirable, companies like Newsizer are well positioned and well poised to find growth in their markets, and then expand the crop of chickpea, and that's an example that is one of many. We'd look at sort of new trade opportunities, epigenetic platforms that create crops that last longer on the shelf, for example. Certainly technology-driven companies that are looking at application of crop protection that do not impact the carbon footprint. So Guardian Ag is a great example of that. The founders here today. Electric battery-driven eVTOLs, and the ability to drive change within an industry oftentimes takes a bit of time, and I think LEAPS has a broad enough perspective across that thesis. So we're focused on soil and carbon today in the conversation, but we're looking holistically at this larger dynamic equation.
So in this market, actually most companies that I'm seeing are trying either to hold on what money they have and not to raise money if they don't need to, or they're raising money often in a down round. We have several public companies, many public companies actually, that have more cash than their market capitalization. What's happening in this market with valuation?
Yeah, I'd say in the soil space, the valuations, I think, are more promising than other spaces. So any thesis that has a really strong environmental aspect, and I'm speaking about a holistic mission-driven organization, not just a single slide in the back that says, oh, we do sort of environmental impact as well. But when the mission and the focus of the business is really environmental impact, I think the valuations are market competitive, and then there's certainly institutional capital out there. So many large institutional capital funds have raised, and their LPs are expecting returns. They can be cautious and patient for a certain period of time, but there's no doubt that those funds will want to deploy capital at some point. So there's certainly, we all know there's sort of a flattening and global economic pressures to valuations. I would say that the soil health space will continue to thrive, and sort of expand that to carbon markets. It is not a down round scenario for most of those companies.
Is that true of most ESG companies, or?
Yeah, I'll hesitate to say, every company is different. Every economic scenario is different. The go-to-market in the B2B to C that is typical for agriculture is very challenging. For companies that are sort of thinking about biologics, for example, clearly an ESG thesis, but the history and the trends show that the valuations have been pretty tough lately. So companies are largely going to have to raise capital on flat rounds and maybe raise capital through a bridge note from their current investors. And these are cycles that cause companies to reevaluate their mission and really get focused. And so it's not necessarily a negative for the outcome of the business, but it causes every company to look at their resiliency and to really become focused on their mission.
Yeah, companies have always used, for the recent past, safes. We're seeing a lot more of that now, where the initial investors will get a discount with a cap on on when they invest, for companies to stay alive for a while in a bridge financing, sort of.
Yeah, that's absolutely true. I mean, Y Combinator made safes very, very common, sort of on the East Coast of the U.S. Debt notes are more traditional still, but I think in this space in ag, it's a combination of both.
So, getting close to the end of this, I believe, but for economically, we've talked about the fact that we can improve the soil. There are probably economic benefits of that to the farmer, et cetera. But what are the economic benefits to investors aside from, you know, talking about things like carbon credits, tax benefits, things along that line that you're familiar with?
Yeah, I think the most valued investor is one that has the ability to sort of stay the long term, but also have passion for the business opportunity, right? So for those businesses that are very focused on soil, all of us touch the soil every day. It's going to be here tomorrow and in a decade and for our grandkids. And so we're always thinking about what that opportunity looks like. With the technology advances, the chemical, the physical, and the biological aspects of soil, we're going to learn so much about that I think the opportunity to grow and to expand that is very, very exciting.
All right.
We've reached the time.
I think we've ran out of time, but so I'm going to ask you one last question.
Very good.
When are you investing in an Israeli company?
So we've already invested in a couple.
Right. Okay.
So we've invested in UCO, and we have a partnership with Trendlines. So we can continue, and we thank Nitsa and Steve for all that support. We continue to support the Israeli ecosystem here. So we're here, and we will be here often.
And we appreciate that. Thank you.
Thank you, Bob. Thank you all.